NVIDIA shares bouncing back this morning. The company is set to report its quarterly earnings after the close next Wednesday, November 19th. Our tech editor, Dan Howley, joins us with what to watch when those results come out. And Dan, part of this, we saw Jensen Huang recently make some comments that seemed to indicate an even rosier outlook than he had already. Are we going to hear potentially more about that with this earnings report?
Yeah, I mean, that's kind of what everyone's looking for, right? I mean, this is the bellwether for the AI trade. And, whether they beat expectations or miss expectations, you can expect a cavalcade of knock-on effects for different AI stocks. And so, there's a number of kind of threads here with the kind of Nvidia earnings report. The first is, this is the first report that we're seeing since SoftBank unloaded their $5.8 billion worth of stake in the company. They obviously did that to kind of pay for their own AI endeavors. They're working with OpenAI on that massive Stargate project, things along those lines. It's also the first we've heard from Nvidia since the AMD financial Analyst Day, where CEO Lisa Su had said that she believes that the total addressable market for AI data centers will be $1 trillion by 2030. And then also, just kind of somewhat related, but more related to the broader AI trade, is Michael Burry coming out and saying that he believed that some companies were exaggerating their earnings by kind of elongating the depreciation of some of their assets when it comes to their data centers. And so there's a number of, like I said, threads going on when it comes to this actual report. But, by the numbers, we're expecting EPS of $1.25. That would be up 54% year over year, and revenue of $55.1 billion. That would be up 57%. Now, I just want to point out that it would be better than the prior quarter, Q2, which was up 55.6%. But, Q1 2026, that was 69%. Q4 2025, that was 77%, and so on and so forth. And so,
in other words, it's sort of we've seen gradually decelerating growth just because earlier on when they were first getting into this business, I mean, the numbers were so eye-popping on a comparable basis.
Exactly. Yeah. It's just the law of large numbers, right? Yeah. You're just, they were starting off with the huge explosion in kind of from ChatGPT. Everybody said, oh, we got to get in this. Let's start plowing money into data centers. And Nvidia just blew up, right? And so now we're seeing that a slight, 50-something% growth. That ain't bad, right? I'm not gonna sneeze at that, but it's not 100-something, 200-something%. And so I do think that, after each earnings, we have seen kind of a little bit of pullback when it comes to the stock price, just the immediate reaction. And I think it's based on those kind of insane expectations. But, we'll have to see what's going on. China obviously is still an outstanding issue. They're not modeling any revenue from China. They've said that now for the past few quarters. There's really no movement as far as that goes. Right. Blackwell was supposed to be potentially going there, but it doesn't look like it is.
Yeah. Are we going to get sort of the percentage of their revenue that's coming from the hyperscalers at this point?
So, yeah, that's honestly one of the biggest questions, right? Every quarter they say roughly 50% of their revenue comes from the hyperscalers. And so obviously that's huge. They continue to build out. Meta is basically, throwing all caution to the wind, it seems, when it comes to their spending. Not that, Amazon and Google and Microsoft aren't. It's just that, we sort of Mark Zuckerberg say, hey, if we're wrong about building it out now, we'll use it eventually. So, okay, cool. That makes sense. But, these companies are also working on building out their own chips. They're also working now with AMD. AMD is going to have a rack scale solution that they're rolling out with Oracle and OpenAI eventually, their Helios rack scale. And, that was something that Nvidia had that AMD didn't. But now that brings in more competition. And, we've spoken about this before, but the kind of custom chips that companies have, whether that's, working with Broadcom or, Amazon with its own Trainium and Inferentium, and then Google with their TPUs. Microsoft has been, kind of thinking about that or working on that as well. And so, there's going to be more competition. The estimate is that NVIDIA still has 90% of the market, right? So, even if they had 75% of the market, they'd still be the dominant player.
Right.
It's just that, we're seeing this more competition, although frankly, we haven't seen any real impact on their revenue, their earnings, anything along those lines. And if Lisa Sue's right and that market continues to expand, that the TAM continues to expand, it'll raise all ships essentially.
Yes.
This Wednesday's significant market rise may be sparked by Nvidia's earnings. Analysts are optimistic about the sales of AI chips and predict a 56% increase in revenue. Leaders in the AI sector believe Nvidia is essential to the expansion of the generative AI ecosystem. With investors and analysts closely examining the performance and future prospects of the AI chip giant, Nvidia's third-quarter earnings report on November 19th is expected to be a pivotal market event. Jim Cramer of CNBC pointed out that Nvidia's stock might move the market based on whether the business meets or exceeds forecasts, provides better guidance, and maintains its superiority over rivals like AMD. A significant increase in Nvidia's stock price could result from success in these fields, especially with regard to its upcoming Vera Rubin family of AI chips. According to analysts, the Wall Street consensus predicts that Nvidia will generate roughly $54.83 billion in revenue, a 56% rise from the previous year, and adjusted profits per share of $1.25, a 54% increase from the previous year. This strengthens the momentum from Nvidia's Q2 growth, in which revenue increased by 55.6% and EPS increased by 59%. Investors want proof that Nvidia's data center division is still expanding rapidly due to the need for AI. Reasons for the experts' optimism. Despite the continuous discussion about whether the AI industry is in a bubble, experts at last month's Cerebral Valley AI Summit in San Francisco voiced widespread optimism for Nvidia's future. The bubble was recognized by venture capitalists, such as investor Elad Gil and partner Ilya Fushman of Kleiner Perkins. Nevertheless, they emphasized the abundance of investment opportunities inherent in AI, particularly in AI infrastructure and foundational models. As a co-leader of generative AI with OpenAI, Nvidia is seen as essential to the ecology of the sector. Cloud service providers, model builders, and AI application developers are all directly impacted by the company's dominance in AI processors. This ecosystem might be affected by an Nvidia setback, but a positive report is anticipated to boost industry optimism and result in significant stock gains. An important consideration for investors is the company's new Vera Rubin chip series, which is anticipated to improve data center capabilities. According to CEO Jensen Huang, Nvidia's growth runway is still substantial as AI workloads expand internationally, even while export limitations confine sales of cutting-edge AI chips like the H20 to China. Although there is a lot of enthusiasm, caution is still necessary. According to study, export restrictions to China might reduce potential earnings by several $billion, creating a real obstacle. Furthermore, the quick growth of the AI industry has heightened concerns about overvaluation, which some analysts refer to as a AI bubble. However, a lot of investors see bubbles as opportunities for long-term value creation and selective innovation. According to Gartner, data center capital expenditures might reach $3 trillion to $4 trillion by 2030, mirroring other tech booms like the dot-com period and supporting the ongoing need for Nvidia's AI hardware. Startups using AI for customer service, legal services, and education are among the innovative business models on display at recent conferences. These many growth paths could indirectly help Nvidia's expansion. This Wednesday's Q3 report from Nvidia will not only show the company's operational tenacity in the face of supply shortages and geopolitical unrest, but it will also set the tone for the near-term future of the AI sector. Experts and investors predict a 30% increase in the company's stock price if it achieves or surpasses forecasts, cementing Nvidia's position as a pivotal player in the AI revolution and a major force behind the development of next-generation technologies. Growing investments in AI infrastructure are helping Nvidia, and this trend should continue for the rest of the decade. Even with the significant increase in share price, Nvidia's value remains fair. Some investors may avoid Nvidia stock because they believe the AI industry is in a bubble that could burst. Nvidia, a semiconductor expert, is arguably the company on the market that is causing the most intense arguments among investors. Nvidia is unquestionably in lofty air as the first business to surpass a $5 trillion market worth, and many analysts believe the leader in artificial intelligence, AI, has the potential to rise even further. However, many others believe that selling would be the better course of action for its stockholders. However, what does that argument mean for the typical individual investor? What should be done with Nvidia's stock at this time, according to its fundamentals? There are many grounds to believe that Nvidia's stock will rise even more, despite the fact that its shares have increased by over 1,350% over the last 3 years. As AI firms continue to invest heavily in data center infrastructure to serve AI workloads, demand for the company's high-end Blackwell and Blackwell Ultra Graphics Processing Units, GPUs, is very high. Nvidia projects that by 2030, investments in AI infrastructure would reach $3 trillion to $4 trillion, indicating the enormous potential that lies ahead. Nvidia, the industry leader in GPU architecture design, isn't exactly sitting back after releasing its Vera Rubin architecture, which is the replacement for the wildly successful Blackwell designs. According to CEO Jensen Huang, the Rubin chips represent yet another advancement in the field of artificial intelligence computing. According to Nvidia, the Rubin CPX will be accessible by the end of 2026. Of course, attention should be paid to more than just the company's impressive intellectual property. The stock is a desirable investment due to Nvidia's extraordinary cash-generating capabilities, particularly its recent surge in free cash flow. Nvidia's strong free cash flow advantage is evident when compared to its fellow semiconductor giant Broadcom chip foundry leader, Taiwan Semiconductor Manufacturing. The price of Nvidia's stock is yet another factor contributing to Bull's recent outspokenness. At the moment, Nvidia's stock is trading at roughly 52.7 times operating cash flow. Although this doesn't exactly look cheap, it is actually a discount to the stock's average cash flow multiple for the last 5 years, which is 54.5. This indicates that the current price is hardly out of the ordinary. The fact that Taiwan Semiconductor Manufacturing and Broadcom both trade now at premiums to their 5-year average cash flow multiples serves to further highlight the argument. What is the sell case based on? Despite the large number of supporters of Nvidia stock, some people are worried. Many investors are afraid that a sharp sell-off in AI equities is imminent because to speculation that the market may be in an AI bubble similar to the dot-com bubble of the late 1990s. Despite the rise in popularity of AI chatbots such as ChatGPT and Perplexity AI, some doubt whether the technology's potential has been exaggerated or whether its applications may not be as significant as AI companies would have the market believe. Whether Nvidia's rapid expansion has resulted in a disproportionate weighting in their portfolios is a significant consideration for long-time shareholders. Having a holding perform so well that one must decide whether to rebalance or let their winnings run is not necessarily a terrible situation. In order to restore portfolio diversification, some long-term owners may find it prudent to reduce their Nvidia holdings at this time. The benefits of investing in Nvidia at this time are obvious and substantial. However, those who are anxious about how Nvidia's stock might plummet if the AI bubble, assuming there is one, pops might want to reconsider purchasing. If the entire AI industry experiences a downturn, Nvidia might have a little decline, but it should bounce back since its foundations are so solid. Furthermore, individuals who are examining their portfolios and noticing that Nvidia stock has taken on a dominant role ought to think about reducing it and reallocating some funds in order to return to their desired degree of diversification. With a $275 price target, Vivek Arya kept his buy recommendation on the company's stock. Investors have been very concerned about the slowdown in AI spending, according to the Analyst. This pessimism is actually a positive thing since it shows that the market is cautious and not excessively enthusiastic, which allows for consistent gains. There is nothing alarming about the AI story itself, Arya continued, adding that the recent decline in AI chip stocks was caused by more general market problems. Notably, Nvidia is positioned at the core of the build-out, and spending on AI infrastructure is still strong. The Analyst claims that Nvidia's primary growth engines, accelerated computing, networking, and AI data centers, are on course. The company's long-term prognosis is unaffected, despite the Analyst pointing out some short-term issues, such as inconsistent gaming sales or project delays in the new data centers. The analyst thinks that Nvidia is one of the most alluring methods to participate in the AI revolution because of its strong market position and expanding order book. The recent increase in Nvidia's consensus analyst price target from $225.50 to $232.79 indicates a slight but significant improvement in fair value estimations. With analysts pointing to strong momentum in data center and AI infrastructure investments, this change implies higher forecasts for the company's revenue growth and increased demand for its most recent products. For information on following these changing market narratives and their potential implications for Nvidia's future course, stay tuned. The majority of firms have noted positive drivers for the company, but there have also been some cautions regarding valuation and short-term execution risks in recent analyst commentary on Nvidia. The key themes influencing sentiment on the street are outlined below. Nvidia's next-generation Blackwell and Rubin AI processors, as well as good momentum ahead of next earnings, have led analysts at Wells Fargo and Oppenheimer to dramatically raise their price targets, both of which are currently at $265. Demand signals for data centers, AI infrastructure, and hyperscaler clients have significantly increased, according to several organizations, including Morgan Stanley and KeyBank. According to both, Nvidia will continue to dominate the AI compute industry. Conviction in Nvidia's strong execution and visibility into multi-billion-dollar order backlogs is a frequent theme among positive analysts. Cantor Fitzgerald highlights over $500 billion in booked business and suggests that current forecasts are way too low. Wells Fargo's steady overweight rating and small target raises demonstrate that analysts are at peace with Nvidia's best-in-class posture and expectations for growth through 2027 and beyond. Both Jefferies and Oppenheimer stress their belief that exponential AI adoption will be a multi-year driver. They are especially upbeat about Nvidia's rack-scale NVL72's performance leadership and the strong demand for the company's upcoming product introductions. Morgan Stanley thinks this trend should reverse despite recent underperformance when compared to AI peers, highlighting Nvidia's competitive advantage as the preferred AI chip. Concerned about Nvidia's increasing role as the investor of last resort in industry agreements with partners like OpenAI, several firms, including D.A. Davidson, warn that if expansion outpaces sensible capital allocation, the company may be exposed to greater financial risk. Citi is still positive overall, but it pointed out that the price objective was recently lowered from $210 to $200, reflecting Broadcom's competitive threats and the possibility of a $12 billion damage to GPU sales as a result of new XPU orders. With Wells Fargo warning that some upside may already be priced into the shares following the significant rally and high investor expectations, several analysts note that valuation is turning into a sticking point. In order to prevent significant effects on quarterly earnings, D.A. Davidson and others stress the significance of overcoming ongoing geopolitical problems and the execution risks in China. Overall, some organizations advise caution on valuation, competitive dynamics, and risk-taking behavior, even while positive analysts still control the majority of the debate and raise their value goals. The overall conclusion highlights the industry's widespread trust in Nvidia's growth leadership and execution, despite market participants' disagreements about how much of the present share price already accounts for future upside. Nvidia is adamantly opposed to the planned GAIN AI Act, a bipartisan law that would prioritize U.S. companies' access to cutting-edge AI technology over exports to China. The bill is backed by Microsoft and Amazon. Nvidia, which controls almost 80% of the market for AI processors, claims that the regulation will needlessly disrupt the industry. By collaborating with leading manufacturers like Foxconn, Wistron, and Quanta Computer, the company is changing its approach to AI server assembly. By centralizing production, Nvidia will be able to better manage its supply chain. A Chinese AI company allegedly obtained some 2,300 sophisticated Nvidia processors through secondary means, highlighting enforcement issues with U.S. export regulations. The case illustrates the difficulties in restricting high-end chip transfers overseas, even when there is no proof of any legal infractions. Microsoft has revealed a massive AI facility in Atlanta and is greatly increasing the capacity of its data centers. The Fairwater AI network will be powered by hundreds of thousands of NVIDIA GPUs on the site, enabling sophisticated training of massive AI models, Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.